What is up, guys? It is Justin back with another video, a highly requested video. I've been getting like spammed comments about SMTs. How do I use SMTs? How do I spot SMTs? So that's what we're going to be going over today in this video. So let's just kind of jump right in. So what is an SMT? Well, first thing is an SMT is a divergence. Now, it can be a divergence between indices. It can be a divergence between, pairs. The way I like to use a divergence is it is the divergence between ES and NQ. So I trade normally ES and NQ futures. I use them to differentiate. So this is what a divergence, an ICT SMT divergence would look like. Notice we have two sort of charts here, right? This on the left would be ES. This on the right, let's say, would be NQ. Notice we have ES making a high, higher high, lower low, or sorry, higher low, higher high. Notice on NQ, though, we put in a higher high, a higher low, higher high, higher low, and then we put in a lower high. So the divergence that we're forming here is what this is. It's a divergence at the highs. Now, if we have a divergence at the highs, this is bearish, right? So this is what a bearish SMT looks like. We can see ES puts in a higher high, NQ puts in a lower high, and then sell off afterwards, right? So this is what a basic SMT divergence is. It is just ES and NQ. One of them puts in a higher high, one of them puts in a lower high. That is a bearish SMT. Now, a bullish SMT is the opposite, and I'll show you that as well. This is what a bearish or a bullish SMT would look like, right? So same thing, going down, put in that low, and then from there, we then bounce. So what would NQ look like, right? Put in that low, bounce. Don't put in a new low, and then bounce, right? So this would be now our bullish SMT. Notice ES puts in a lower low, NQ puts in a higher low. So now what would we be looking for, right? Well, most of the time, what a turtle soup model is for an ICT is once you get an SMT and you have a clear draw on liquidity, you could take an entry for whatever the break of structure is or whatever the fair value gap is. So in this case, if I was trading this would be my break of structure, make market structure shift, whatever you want to do. And then you could trade the pullback to a fair value gap or whatever it is. So this is what a basic SMT looks like. Let's jump into some charts and take a look at some more examples. So here is an example of an SMT divergence. On the 15-minute chart, if we look at the left side here, we can see we have ES. The right side, we have NQ. Notice we had a low here on ES. We had two little equal lows down here. Market sold off, swept this low, and formed an SMT. Notice if we look at NQ, the same low on NQ was never taken out. So we can see ES is forming a lower low. NQ is forming a higher low, right? This is a bullish SMT divergence. Notice right after ES sweeps this low, what do you think a lot of retail traders are doing? A lot of retail traders are shorting this breakdown, is trying to catch, a move to the downside, when in reality, what you should be trading is this sweep of this low. Again, what's the next target once we sweep this low? Well, if we have an SMT at the lows here, which we do, and we sweep this low with big displacement, notice, sweep this low and then instantly have buying pressure back up, the next buy side level would be that previous high put in. Notice, right when we form that SMT and ES sweeps this low, we instantly bounce back up, have huge volume to target that recent high on ES and NQ, right? So if I was going to take a trade here, what would I look for? Well, let's zoom in, right? Because we want to sort of combine the model that we trade. So this is what the SMT would look like on a 15-minute. So if I zoom in, what would I look to trade? Well, let's go to the 5-minute. Now, looking at the 5-minute here on ES, we can see we had big displacement back up. Now, one thing that I like to take into account is when I have an SMT, I don't necessarily need to see a market structure shift or a break of structure. After I see an SMT and I have a clear draw on liquidity, I can take the next fair value gap. So this is what my long entry would be if I was to take a trade here. Wait for that displacement back to the upside. Here we go. You can see this big move up. Fair value gap created. Wait for the pullback into that fair value gap. Stop. Again, the stop could be dependent on what your risk tolerance is. You can put it at the low. You can put it at the wick. Doesn't really matter. Targeting that previous high. So this would have been a beautiful setup. Again, all formed from that SMT on a bigger time frame. So let's look at another example. So here's another example of an SMT. If you look at the left side, we can see ES never swept this low. NQ did sweep this low. So on NQ, we're forming lower low. ES still forming higher low. We have a bullish SMT divergence. Notice right after we put this low in, right after NQ sweeps this low, we instantly get bought back up, targeting that previous buy side level, which would be that high that was put in. Notice instant buying pressure back up, right? So let's zoom back in and see again if there an entry. Looking at ES and NQ, you'd want to take whatever that first fair value gap is. If we're looking at ES, have that fair value gap right here, pull back into this, and then gets bought up, targeting that buy side level. Same thing with NQ. Get a fair value gap right here, pull back, big push to the upside. Let's look at another example. So here's another example of an SMT looking at ES. Again, this is now a bearish SMT. We've been looking at only bullish SMT so far. This is a bearish. Notice we look at ES forming a lower high, but NQ ends up sweeping this previous high, forming a higher high. Notice what happens after this. Well, we get that nice rejection. We get internal liquidity being swept on both ES and NQ. And then right after that, we flush to take out that previous low. Right? So SMTs are very, very powerful if you use them correctly. These are bigger time frame SMTs. I also like to use SMTs on smaller time frames if I have a strong bias, because a lot of the things it could do is if I have a model, it can form an SMT inside of that model that gives me even more confidence. So for example, let me draw it out. So this is another example of how we could use SMTs inside of a model that we trade. So notice, this is a normal buy model of what we'd look for. External liquidity being swept, internal liquidity being swept, market structure shift or break of structure with big displacement, pull back into this fair value gap. But notice in the fair value gap, when we get that original bounce, right? When we get that original bounce from here, right? Normally this would be our entry. We'd enter long. First target would be that previous high, and then we'd, let it run. Stop would be at, I'd put at the recent low. Now notice, most of the time when we enter something like this as a trade, we push down and then instantly get bought back up, and the first target most likely gets hit. Now, there's some times where we don't end up taking that high, and we actually come back down and sweeping this low. A lot of times when we come back down and sweep that previous low, we actually form an SMT inside of that model. So this is what NQ would look like. So this is what the two would look like. Notice ES, we're both forming bullish models, which is really nice. If we're looking for that entry, notice ES pulls back into this fair value gap, sweeps that previous low right here, and then look at NQ. We never ended up sweeping that previous low, and we end up forming a bullish SMT inside of our fair value gap, which gives us even more confidence, right? So here's another example. It's actually happening right now, a live example. But notice, if we're looking at the lows on ES, we can see ES put in a lower low. And if we're looking at NQ, NQ is still forming a higher low. Notice what happens after we put in that low on ES. Well, we get that initial bounce, and we target that previous buy side level, which was that previous high on NQ. Look, see? Put in that low, get that buying pressure, beautiful push back up to whatever that previous high is. So SMTs are very, very strong. The more that you start to use them and the more experience you gain with them, the more you're going to add it to your arsenal and be comfortable with trading it. I recommend starting to just draw them on your charts throughout the day. If you see them, use it on all time frames. My favorite time frames I like to use with SMTs are the 15-minute and the 5-minute. Sometimes if you're looking at the 1-minute SMT, it might fake you out a little bit. So do be aware of that. I also do draw it on the 1-minute, but just be more aware of that. And just, draw them on yourself, start to build confidence with it. And the more that you use them, the more that you can start to build a model behind it and learn how to trade with them. So I plan to make more SMT videos in the future, more in depth on specific trade models I use with it. But I'm hoping this video gave you a basic understanding of what an SMT is, how to trade it, and how to just, spot it on the chart. So hope this video helped you guys in some way. If it did, leave a like, make sure to subscribe, and I'll be posting some more educational content for you guys this week. So be on the lookout. Have a good rest of your day. Peace.